Sanjay Koul, Chairman Managing Director of Timken India, joins in to discuss the business outlook. Sanjay, it's good to have you on the show. Thanks very much for taking out the time. Can you talk about the demand outlook from domestic series? Do you see segment-wise things improving?
Yeah, thanks. Good morning. I think that the first 6 months of this financial year were pretty robust, and everybody was happy about it. And then the same success growth cannot last. So November and December has been a kind of an inventory correction. But when you see the overall April to March, I think it will be for commercial segment. India will make more than 400,000 more than 7-tonner vehicles, which would be a robust growth over the last financial year. So we should not get unduly worried about this November-December inventory correction. There are a little bit crisis on the liquidity front, but overall there is a pull in the market. The demand is very much there, and we should be finishing the year more than 20-odd% over the last previous year. So with the 15-year-old policy on the horizon, Euro 6 policy on the horizon, I think 1920 still will be a double-digit growth over this year. So overall, commercial vehicle should be pretty much okay. Obviously, there is the Class 8 drop looking in America, which kind of people suggest that 12 months down there might be a kind of a significant drop in the American market, but the Indian market is going to remain strong. Europe is going to be stable, if not very buoyant. And changing gear to railways, spend is happening in railways. They are looking at building more wagons. They have to convert from Schlerian to Fiat LHB coaches. So all that is going to have the pull to the bearing segment. And then the freight movement is also increasing. So rail steady. Commercial vehicle also will not be, it won't be like this year, but next year it will be still double-digit growth. What is interesting is that the industrial pull is pretty strong. The MRO business is pretty strong. Cement capacity utilizations are going up. Metal is going pretty strong. This month is a little bit softening, but overall, metal is getting produced more. Aluminum is getting produced more. The core sectors are moving. So we see a very strong pull in the industrial market, both the process, which is the stationary equipment build, and also the MRO side. So overall, we are not going to be very, very highly kind of gung-ho, but it is going to be a great year again. H2 is going to be okay, and then 1920 is still going to be a good story for India.
Right. So do you see industrial segments grow and lead by new product introductions? Is that going to be the story going forward?
Absolutely. With all the changes which are happening in the industrial world, there is a lot of obsolescence which is taking place. People are moving up the value chain. On the shop floors, you see drastic changes. You go to a shop floor today, and same shop floor if you see a picture of 10 years back. So there is a lot of changes happening. People are using robotics. Very small scale industry, you walk in and you see robotics, robo-arms doing this. You see new state-of-art equipment coming in the heat treatment world, which is very important for the manufacturing world. For both metal making and metal forming, new technology, new assets, new equipment is coming in. Now, had India had the capability of producing those equipment themselves, then we would have been really rocking. Now, obviously, these equipment mostly are coming from abroad, but then they are getting used in India. So you're absolutely right. There are changes happening, and further changes will happen. The technology cannot be pushed out. If you don't adopt technology, you will be a passive. So everybody is moving up on the value chain, whether you call it Industry 4.0 or IoT. But the fundamental thing is that you want to simplify manufacturing. You want to kill waste. And that can be only done by technology, and that is happening. That is happening in our plants, and we see that happening in our vendor base. We see that happening on our customer side.
Okay. Analysts suggested they're expecting low to modest growth from domestic railways. Do you share that view?
Can you repeat? I'm sorry.
Analysts believe that from the railways segment, growth is likely to be below par. Is that
the story of railway? If you look at India, our track kilometers are a lot lesser compared to America, compared to China, compared to Russia. So we have a big need of building more tracks. We have a big need of building electric locomotive, which means electrification of the tracks. We have a big need of going on a heavy haul on the wagon side. We have a very big need to put more passenger trains on the tracks. We have so much domestic demand. Had the government or the railways have their act sorted out on the financial side, there is so much demand, so much movement of rail that has to happen. While I would say that it won't be below par, it would be moderate, and railways can always surprise you by coming up with out-of-the-box idea. Say, for example, if they come out with an idea that the passenger coach can be built and leased by a private operator, and you will see a revolution coming in. So there is what is more important is there a demand in place. So there is a huge local demand, and that demand has to be harnessed. Now, the speed of execution of that demand is what is going to be a change factor. I won't say it will be very bad, but it won't be, knowing our own country, knowing our railways, it won't be rocketing out, but it will be steady, solid growth.
Okay. Sanjay, before we let you go, can you talk about utilization at ABC Bearings? Do you see potential to double the revenue there?
Absolutely, as we had taken the whole play for ABC for us was using the capacity, go to the market quickly, plant on the west coast because we want to export. That is 10 days saving to the east coast of America. So currently the plant is under 40-45% capacity utilization using the ABC brand. We could have easily filled it up with more ABC, but we are converting these capacities into what we call as Timken circular. So we are converting it to high quality. So I think come May, June, we should be ready and getting the brand approved from the parent company. So Timken will certify that Timken brand can be produced there, and then I think we would be in the game to export and also use that brand for the domestic market. So by the end of 19, so the calendar year 19, any time after October, we should be on the capacity utilization. 100% sold out would be the story.
Okay, Sanjay, all the best then, and we'll chat again soon. Good to have you on the show.